Okay, guys, welcome. Today we're going to be looking at the Bitcoin price action. We're going to be seeing what has price been up to. We've had a massive rally from yesterday. We've had a drop down. All right, is this drop the decisive drop? Is this going to take us all the way back down to the 30 grand, 20 grand, 14 grand, 10 grand, 5 grand? We're going to be looking at the price action and seeing what Bitcoin has in store for us. All right. But first things first, just to let you guys know, we've got bootcamp coming up. That is at the last Sunday of each month. So we had one in April. We're going to be having one in May as well. So if you do want to get involved with that, feel free to go on the website, tradejournal.co.uk, and sign up. And also, I've got a present for you guys. I'm giving away my very own trading journal. So this is a journal I use to track all my trades, day by day, trade by trade, week by week, year by year, month by month. Everything. I track everything, and this is useful. It's great as a trader to be able to document your progress, and not just your gains, not just your financial gains, all right, but also to be able to document your thought process, your thinking framework as you place these trades. Are you, a bit too risky? Are you setting your stop loss? Are you moving your stop loss too early? Are you revenge trading a lot? Are you taking a big loss and then as a result you're getting into the market with a crazy lot size or a crazy position? This is how you track that, and this is how you improve as a trader. So here we've got obviously the price breakdown, your hit rate. You can see what your hit rate is, your monthly net profit. You can also look at the kind of mistakes you're making. So what kind of mistakes are you making? How did you feel when you placed that trade? What actions have I taken to improve, and have they actually worked? All right, so this is how I think it's best to improve as a trader, especially at that beginner level. Okay, so anyways, if you do want that, very simple, hit that follow button and then hit me up on Discord. The link is in the bio. Just send me a message on Discord and I will send that across to you. I believe someone requested it yesterday. I'm just going to quickly double check. I think someone did request it yesterday, and I sent it across. So it says, hello, could I have the trade journal spreadsheet from your video from yesterday? And that was it. So I just sent that across. Now he's got that. Now he can track his progress and he can improve iteratively as a trader. So hit me up and I will send that to you as well. All right, so let's talk Bitcoin. What's been happening? All right, let's build that narrative. So as for Bitcoin, we know that yesterday we said Bitcoin, it is decision time for Bitcoin, which means Bitcoin has to decide what it's going to do. Is it going to drop from this range? Is it going to break bearish, or is it going to continue further up? And we said, right, we are in that range. We're in that massive range, the macro range. We rally down from our range, creating a nice accumulation model 1, which each successive low trading lower than the prior low. We had tap 1, tap 2, and tap 3. But we said that's usually that is a good sign for a good rally up. But that rally up was a bit mediocre. Look at that, it was a bit mediocre. And not only was it mediocre, it SFP'd that last lower high. And what does that mean? That means we're going to get a rotation down. Lo and behold, we got that rotation down. So we broke through this demand zone. It was respected with a 1, 2, 3. Well, you can see this model, this 3-tap model is kind of trending downwards, which is not usually a good sign. And I did say yesterday that there is a high likelihood we come down. I was feeling very bearish yesterday. That's why I said decision time for Bitcoin. There's a high likelihood we're coming down to test these range low. And if we do test this range low, we've got two options. First of all, we can do a tap number 4. So that would be tap 1, 2, 3, and then a 4th tap over here. All right. But we already know that a 4-tap model isn't the best for Bitcoin. A 4-tap model has a very low predictive probability in the sense that when Bitcoin does a 2-tap model, great. That's just a second entry. It tends to work. When it does a 3-tap model, great. It's just an accumulation trinity, model 1 or model 2 based off of Wyckoff, right? Tends to work. But when Bitcoin does a 4-tap model, now that means it's attempted once to go high, twice to go high, 3 times to go high, and none of those has worked. So what's going to happen? It's just going to do the opposite. So usually these 4-tap models tend to fail, and that's exactly what we've seen here. But we said in the case we do get a failure, what are we expecting? Well, obviously in the case we didn't get a failure, we were expecting a long. We didn't get a confirmation there, so we should not have been in a long. None of you should have entered that long. If you follow the principles I'm going on about here, I think none of you had that confirmation to enter that long, basically. And I said in the case we go short, we're looking for Bitcoin to rally down, retrace, all right, and continue. Okay, we said we had that a daily zone all the way over here, but we said we're gonna let it ride. We're not gonna panic. Now I know the whole crypto world has seen a massive markdown in the last 24 hours, but we're not gonna panic, all right? Because we know what's happening, we're expecting what's happening, and we're reading market structure accurately. So here we've got a breakdown and a retracement into zone, a pullback into zone, and a continuation. So let's see what actually happened. I'm going to play this so we can see what actually happened. So here we go. So that's when I obviously had the post, and this is actually what happened. So we marked down, we broke quite decisively down, and then we accumulated here and we rallied up. So we're going to take a look at what that accumulation model looks like, and we're going to see whether we could have entered a trade. Now, I'm not going to sit here and tell you, I entered that trade. I didn't enter that trade. Today was one of the busiest days of the week. Wednesdays are usually quite busy for me. So I was planning to enter, but I just wasn't at my computer screen at the time. So I did not enter that trade. Like, I am not in this long at the moment, but we're going to talk about it regardless. Okay, so let's go into the market madness. So we know what Bitcoin has been doing. We know Bitcoin has been in this range. All right. If we look on the 4 hour, we can see the range clearly. We had, as far as our range goes, we had a range high, we marked down, we had a range low. We played around, created the model, didn't quite break as we should have, and then we've come all the way down here. All right. It's kind of given us this nice, that nice move. All right, the trend line, there's a bear trend line coming over there, right? So let's see, where we are. So we're gonna go on an hour, and as we go on an hourly time frame, we're gonna get a picture of what Bitcoin has done so far. So on the hour, we can see clearly that we're in a local bear trend. All right. Oh, Bitcoin is going down. It's it's coming back down. All right, cool. We're in a local bear trend. Okay, and as of last stream, we're going to use the bar replay tool, and we're going to come back here. So we're going to come back here. Why are we coming back here? We're coming back here to see whether we got any confirmation at the zone to enter in the first place. All right, and to see whether we could have been in a trade. All right, so for those of you who are looking to enter that trade. All right, so in terms of our market structure, all right, what's happened? Well, in terms of our 15-minute market structure, we've been printing lower lows and lower highs as we came into that spot. All right, so at the moment, we've got a lower high, we've got a lower low, lower high, and a lower low. Okay, now this is our zone. Did we get a reaction? Yeah, we got a tiny reaction, but not decisive reaction. Nothing broke structure here. And then we just pierced down. Now, as we pierce down, if we follow the market structure, let's see what happens. Well, market structure shows us that on the 15 minute, we did break structure bullishly. We broke above that level. So what do we expect after breaking structure? Well, after breaking structure, we expect a retracement downwards and a continuation upwards. So really and truly, we're expecting something like this. But why did it not happen? Why did this break? Why did that break not fulfill what we wanted it to do? Well, why don't we take a look? Well, if I box this zone quickly, we're going to analyze that break. And let's see whether that close above that level was a close on the higher time frame. So if we go on a 24 minute, all right, so on a 24 minute, it's already looking very wicky. All right, it's looking very wicky. So what that means is the 24 minute, it was not a decisive close. In fact, on a 24 minute, it starts to look kind of like an SFP. Okay, so we can't really look at a 45 minute because in terms of our 45 minute structure, our last low high is all the way up here. So we can't really use that. So we're going to use a point where we do have definite structure. And the 24 minute, we can see that clearly. And what do we see over here? Well, we see that we create the low, we create the high, we create the low, we create the high, we come back. But in terms of our close, we kind of SFP that level. And what does that mean? It means we're expecting a rotation down. Now, some people may see this as a break, but it's not a break. Because if you staircase this, you can see that, this wick, it was barely a close above that prior high. And then we kind of just wicked all the way across. All right. So So as we played, oh, there it was. There it was. As we played the price action, then we had that massive rally down. Okay. So what we had here was a drop. Oops, excuse me. So I'm going to get rid of that zone now. So what we had here, we had a drop, base, drop. Nice drop, base, drop. You could see this as a bear flag. You could see this as a bear flag. It's a bearish continuation. All right. But yeah, so we did not get a confirmation there. Now the question lies, TJ, why are we reacting here? Why did we start to accumulate here? Let's go back on the 15-minute or the 12-minute even. Why did we start to accumulate there? You know, why did price action stop there? Well, the reason is in the charts. It's always in the charts. And I know many of you use indicators and many of you use like confirmations, and that's great. That's great. They do work. But I would highly recommend, if you can mix your market structure analysis with indicators, man, then you're kind of doubly ready, you know, to take on these markets. So anyways, why did price drop here? Let's see, where did price stop? We're going to use a horizontal tool. Price stopped at around 56 530. Now, you know exactly what I'm going to say. I'm going to say, well, this is probably an interesting zone as far as supply and demand. So what we're going to do now, we're going to investigate whether we have a supply or demand zone over there. Well, usually a demand zone actually, right? Because we're bearish. So let's see. So as we come to the left, I'm going to show you that we not only had a 12-minute demand zone, okay, we also had this massive demand range. All right, we had this massive demand range, and you can see this clearly. I know this looks a bit messy, but if you do follow the channel day by day, you know exactly what I'm talking about. We can see this clearly, this little distribution here. All right, this is demand. All right, because this has been the distribution that caused that reaction up. All right, similarly, we've got another demand here, which is what we're waiting for. But if you're wondering, why did price stop where it stopped? That's exactly why it stopped where it stopped. Okay, that's what price tends to do. It just bounces between supply, demand. Okay, so what we're going to do now is we're going to look at, you know, like I said, I didn't enter this trade, all right, but it was an easy one to enter if you were at the charts. Personally, I was waiting for price to come a little bit lower for that breakthrough, but it didn't. All right, so it stopped here. Anyway, so let's take a look at this trade and let's analyze what happened. So we had this massive move down. We had this massive bear bar. This is scary, you know, this is scary, very rapid move. This is about a 5% move, you know, within the space of, you know, just less than 2 hours. But what did price do? As we came back to that zone, price rallied down, and as price rallied down, price created a first low. All right, so there we have our first low. Okay, so before we look to enter that trade, well, we're saying, right, the last lower high needs to get run. We need to get a close above our last lower high, as I say here every single day. All right, so we're going to see whether we got that. And I'm just going to move this over here so we can see the white chart. And I'm going to talk you through my thought process. So what am I thinking here? I'm thinking, well, we're on a 12-minute. These bars look fairly aggressive. They don't look like they want to be messed with. All right, so I'm not going to mess with them, especially not on a 12-minute. So I'm going to drop down to the 10-minute. On the 10-minute, it's still a straight sweep down. So I'm going to drop down to the 5-minute. All right, in the 5-minute, we're starting to develop a little bit more structure, but it's still a straight sweep. Kind of a straight sweep down, all right? Let me get rid of this for now. And then let's see the 3-minute. Remember, the lower you go in time frame, the more risk you take on, all right? But on the 3-minute, we start to see clearer structure. What do I mean by that? So on the 3-minute, why am I playing this? On the 3-minute, what we see here is that we have a lower low, lower high. Then we have a lower low, lower high, making this the last lower high that needs to be broken, all right? And then what we have after that is we have another lower low, a lower high. Okay, good. Making this the last lower high that needs to be broken. And then we have our structure end over there, which means this becomes our decisional level. All right, great. So we're waiting for price to break above that level. Now, on the 3 minute, what does price do? Well, price obviously reacts off of our demand zone, and then it breaks that level. Okay, not only does it break that level convincingly, look at that, good solid close above that level, it leaves a little bit of demand here. It leaves the demand zone. I believe that was on a 12 minute. We can analyze that in a second, which we're going to see how that demand zone played out. Okay, so what price did then, it broke that level. So what you could have done after that break is you could have said, right, we've broken from that level, which means I'm looking to enter on that retracement. The retracement happens here, so we could have looked to enter here. If we enter our trade there, where do we place our stop loss? Well, if we enter our long trade there, our stop loss needs to cover that prior low, and we're going to look to ride that all the way up. Okay, so that's what the trade would look like. So let's see what happens. So price came down, we would have entered there at that zone, confluent with our zone, and we would have taken that all the way up. Okay, but what did price do now? So price played around, and then price did something beautiful. Price formed a range. It formed a little mini range, and we love ranges here because they happen every single day. If you decide I'm just going to be a range trader, do you know how much money you could make trading ranges? It's crazy. But anyway, so we have our range high and our range low. All right, clear range. We're going to put that, let's put that in orange and make that times 2. All right, so what am I looking for? Well, I'm looking for either a range model 1 or a range model 2. All right, range model 1 is a sweep of the extremes, and a range number 2 is a reaction of the internal zones of that range. Mind you, we already have that zone here. It's been mitigated once, which means, all right, it's got a little bit weaker. It's not as strong as it was if it hadn't been mitigated already. But what we can see here is that price creates this nice trend line of curve liquidity. Okay, so we have a nice curve liquidity over here, which gets swept. Remember, we talked about curve liquidity late last week and in the bootcamp as well. All right, so price started to come down, but let's look at the structure as price comes down. Price does something interesting. All right, as price comes down on the 3 minute, a bit wishy-washy structure, but let's see if we can make sense of it. So we have a low high. We have a low high, and then we have that. Okay, so this is a structure on the way down. And on the way down, what price then does is price creates a range at this demand. Can we see that range? Well, where is that range? If we draw out our range, well, we've got a range low and we've got our range high. What do we expect for our range? Well, we expect either a model 1 or a model 2. And here what we get, let's see if we get a model 1 or a model 2. Oh, sorry, the range is a bit higher. Interesting, it reacts off that 12-minute supply zone. But anyways, as we develop that range, boom, that is beautiful. So what we get the first reaction, then we get the second entry internally at this previous demand zone. All right, and not only did we get that, we get Market Cipher giving us the most beautiful, I can't say beautiful enough, beautiful bullish divergence. We have the price rallying down. So as the price is rallying down, all right, we have our momentum going up, we have our momentum heading up, and we have our money flow with a decreasing gradient, all right, or thinning out. This is a very bullish sign. And lo and behold, what happens? All right, price breaks structure here, okay, internally, and then what we see is a clear range break. All right, so we're looking to at least take that to the top of this range here, and what we see after that is a clear range break. All right, nice. That was it. Okay, so where would you have entered that trade? You could have entered that trade here if you're feeling a bit risky, honestly. But usually you wait for that break, at least the internal break, and you look to enter right around here. So you would have entered that trade around there if you got into that one, based on, just market structure, to be on the safe side. Where would you put your stop loss? At least at this level here, covering this low for this model. All right, and you would have taken that all the way up here, giving you a nice 4.16 risk to reward. All right, that's nice. All right, so what we've got here now is price is starting to come down, but as price comes down, there is still an opportunity here because this may simply be, okay, our range, a breakout from our range, and a return to zone. What do I mean by return to zone? Well, after every breakout, we're going to get a return back into our zone. Now, if price is to continue going bullishly, we need to see where could this return happen? Where could this reaction take place? Well, this reaction could take place from potentially, do we have any zones here? So you want to investigate this leg to see if we've got any zones here. Perhaps one may be there, or one may be hidden in that wick over there. And also we want to look at the volume profile. What's the volume profile saying from the range low, to where perhaps the range broke? Well, where's our value area high coming? It's coming over there. Well, we've broken that. Our POC is coming over here. So I'd be looking at that POC level to see, are we going to get a break in structure at that POC level? Okay, for that nice continuation up. All right. As you know, I've only got about 21 minutes here, and I haven't done a great job of getting through the content as quickly as I should have. All right. So I am going to post what my levels are in a picture similar to what I did over here. And we're just going to watch these levels and look for our clear confirmations. Okay, remember your confirmation is a change in market structure or market cipher. All right, but I do just want to mention something. If time allows, the stream may cut at any point. Okay, but if time allows, I just want to let you know. Obviously, we've broken down from this range. All right, there is a possibility, and this is a beautiful thing about trading. There are so many ideas. There is a possibility that we have our range. We have our manipulation, for those thinking, oh, we're breaking down, and then we expand up. This would be like a reverse PO3. For those of you who know what PO3 is, you know what I'm talking about. All right. But to keep it simple, this is the decisional level. This is our next bearish target, 50,432. All right. If we lose this level with a close, then it's danger. Then it's danger zone. All right, but until we lose that, we're good. We're just playing. We're playing within this range. We're broken from this range. We're looking to retest this range and continue further down. All right. If you want to know where that retest could take place, I'm going to show you how to find it. I don't think I'm going to have time to find it, but I will show you how to find it. So to know how that retest is going to take place, have a look at this leg. Okay. See if we've got any supply zones in this leg. And perhaps obviously we've still got this zone that's not no, that's been run. We've got this zone that hasn't been taken out yet, but it's quite high up. All right, it's quite high up. If we come all the way up here, it means we may just take the high again. All right, so be careful. So have a look at this region, and see whether we've got a zone there. If we do have a zone there, draw it out, and that is an area to watch out for a change in market structure. Now, it looks like we've got a bit more time, so I'm going to show you what the confirmation looks like. Let's say we've got a supply zone. If that's our supply zone, we're looking for market structure to do this into our zone as we come up, printing high highs and high lows. As we tag our zone, we want it to break structure almost immediately, retracing and then continuing further down. We're going to look to enter on that retracement. So this is where we get in. And not only are we going to get in there, but market cipher is going to give us a confirmation before we do that. Market cipher is going to be giving us a bearish divergence. So on this, it's basically going to be a leading indicator in the sense that it tells us when the turning point is going to happen. We're going to get higher highs over there, and the oscillators will be giving us lower lows, giving us a bearish divergence. All right, so there we have it. If you found this useful, if you found this educational, if this just clarifies what you might be looking out for in the market, feel free to hit that follow button, hit the boost button. Let's see, I think we're about 130 followers. Let's see if we can get that to 140, 150 in the next week or two. Otherwise, you guys have a great evening, and I will see you tomorrow.